Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is Jeffrey Halley, Senior Market Analyst, Asia Pacific at OANDA. Now, Jeff, thanks for coming on the show.
Thanks very much, mate. Thought I'd wear my formal Indonesian batik today. This is what we visit government offices and do business in. I got a bit bored wearing a suit.
You know what? I'm sure I'm going to get a lot of positive comments from our viewers. But before we get your insights, let's take a look and see how markets in the region are performing. We're going to start with the cryptocurrency market first. Bitcoin is at 34,863. It's up 1.51%. But Ethereum has gone up significantly. It's above the 2,000 mark. It's 2,124.7. It's up 7.74%. Now going on to regional markets, we've got the SGX, which is at 3,096.47. It's down 0.97%. Bursa Malaysia is at 1,545.68. It's up 0.06%. Now, if we look across the region, and we will see that, and I'm just waiting for the numbers to come on. It's taking a bit of time. Sorry about that.
It's all red.
It's absolutely a sea of red. We've got the Nikkei is at 28,775. It's down 0.94%. The Shanghai Composite is at 3,572.27. It's down 0.95%. The Hang Seng is at 29,043.02. It's down 0.77%. The ASX 200 is at 7,278.3. It's down 0.4%. Rounding off the numbers, it's the Kospi, which is 3,280.72. It's down 0.64%. Jeff, despite the S&P 500 and the Nasdaq Composite both closing at record highs overnight, Asian markets are in red this morning. Why is that?
Yeah, there's a couple of things in play here. Firstly, the Dow Jones actually fell overnight. So Dow Jones it's very much a growth index full of legacy companies that are very much have a high beta to the global recovery story. So this ongoing rotation out of growth and into value is going on uninterrupted in the US as it has been of the last few days. So if we look just below the surface there in the States, yes, it had a positive session, but it's suffering some growth nerves as well. And the reason why Asia is down today is, of course, the pandemic, Delta variant, COVID-19. Now, we know Malaysia has issues, Japan has issues. Brisbane entered a lockdown today in Australia, so that's 4 state capitals that are in lockdown now. Obviously, Indonesia is having some extreme issues at the moment, and this is a problem right across Asia, even in places such as Thailand, Vietnam. This has started weighing on sentiment yesterday in Asia, but it has continued today. And we saw European markets overnight also weighed down for much the same reason, this Delta variant arriving in the in the European continent and also making its presence felt in the UK. So the United States, the rest of the world really is very much in pandemic watch at the moment. And that's causing some concerns that we may have to readjust the pace of the global recovery or the reopening. And this is what's weighing on equities in Asia today, as it did yesterday as well.
Okay, Jeff, let's take a cue from you and talk about one Asian country in particular, Malaysia. Now, the World Bank has downgraded Malaysia's 2021 outlook for growth from 6% to 4.5%. And overnight, Malaysia announced a 36 billion stimulus package. What's your view on this?
Yeah, it's an impressive package. It's very much aimed at the lower income echelons of Malaysian society, supporting income, also pension payments, utilities, such as electricity, and also allowing them to borrow with effectively a government guarantee from a bank as well. So there's lots of nuts and bolts under there, very much tilted towards that. I think that's positive in the short term, and it needs to happen because we just don't know when the Malaysia lockdown is going to finish. I'm not quite sure it's really going to impress the business community as such. I think it's very much tilted to the man on the street and supporting their daily lives rather than necessarily supporting large businesses. And even the SME components of it, the numbers are quite small there as well. So I think it's good for the man on the street, less so supportive wise for shall we call big business. And I think that's why the Bursa Malaysia's unchanged today. On one hand, the package has lifted sentiment, but you still have COVID-19 issues there. And of course, the political situation there, or the political landscape there, is as murky as ever. And I think those two forces are balancing themselves out today.
Now, speaking of Bursa Malaysia, it's actually one of the worst performing stock markets in the world in 2021. However, Malaysia is very much from an economic standpoint, a two-speed economy. You've got some sectors that are doing very, very well. It's an oil-producing country. So oil prices are in record territory over the last 2 years in terms of prices. You've got the export numbers that are very, very good. But then, as you correctly pointed out, the SME space in the broader economy, which is the bulk of the economy, is not doing so well. So on Bursa Malaysia, where are the opportunities for investors and traders who want to profit from potentially an undervalued market?
Well, the obvious one now is going to be the glove makers because of this Delta variant and the resurgence of COVID-19 around the world. The demand for those products is not going away anytime soon now. They do have those well-documented labor issues with certain key markets, and they're going to have to address that. But I think underlyingly, some great businesses in there. If you're looking for a real growth play to face the global recovery, I don't think you can go too far past Malaysia's large banks either. Have excellent dividend yields. In fact, you'll see a lot of larger companies within the Bursa Malaysia that have excellent dividend yield. So even if it's not a capital appreciation play at the moment, for a longer term investor looking for a strong dividend yield, I think Malaysia has a lot of great stocks. And but my picks would be the glove sector, obviously, but really a safer play for me would be the large Malaysian banks. Now,
it's Tuesday now. Quite a lot of data coming out globally this week, including the jobless numbers. What are we looking out for the rest of the week that really could move markets?
Yeah, when we look at equities, we can see they're wilting a bit under the strain of this COVID-19 concerns. But actually, when you look at markets such as gold or precious metals, commodities, and the foreign exchange markets, they're all very much in a holding pattern. They're sitting on their hands and they're waiting. And they're waiting for the PMIs to start coming out from China tomorrow, and then the unofficial, the Kaizen one on Thursday. But on Thursday as well, being the first day of the month, we also have a huge dump of PMIs, manufacturing PMIs from right across the world. And that will give us a bit of an insight in the direction of travel for the global economy, followed, of course, by the main event of the week, which will be the US non-farm payrolls, where the market is currently expecting about 600,000 jobs. So a really heavy week in the second half of the week for data for both Asia and the rest of the world.
Now, Jeff, thank you very much as always for your insights.
Always a pleasure, mate. Take care.
Now, we've been speaking with Jeffrey Halley, Senior Market Analyst, Asia Pacific at OANDA, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This video will be on our Facebook and LinkedIn sites, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks a lot for tuning in.